Okay, very good morning to everyone. Wednesday the 16th of August. Hope you had a good evening. Just getting into the briefing, and we're going to have a slightly different tact to the briefing this morning because I'm just going to come on and give you a bit of a wrap up of a little bit about yesterday and some of the overnight news flow. Then I'm going to hand over to Senior Analyst Sam North, gentleman over there in the background. He's going to jump on and he's going to have a look at the charts technically and look at some potential setups that we could be looking at for the session ahead. So, firstly, in terms of yesterday, after what was one of the biggest rallies that we had, certainly in US equities in the case of the S&P in about 3 months on Monday, on the back of a kind of de-escalation, if you like, on the Korean front. Yesterday, US equities finished basically flat. So after this period of, after this period that we had of essentially very low volatility, we then broke out of that and had the single percentage-wise move in the VIX index, the 8th largest day on record. Now we've gone back to kind of revert to the mean, if you like. And so overall, not too much in the way, certainly, of an outright sizable move like we had seen the prior day. The close on the S&P flat, basically the same in the Nasdaq and the Dow. All movements were less than 0.1%, to put it in a bit of context. But certainly on the Korean situation, there really hasn't been much in the way of anything new in that regard. There is one news story that I found. This is more like the PR machine, if you ask me. This is North Korea can make ballistic rocket engines, according to, guess who? The United States. You know, if you're looking to kind of validate the president's stance, then actually there was an independent study which came out only very recently. In fact, it was this week, and it said that North Korea basically doesn't have the technology. What it's been doing is illegally purchasing it off the likes of the Russians and Ukraine. That's where the technology and the intercontinental ballistic missiles are coming from. They're built elsewhere and then imported into North Korea, not made on their own. And so to suggest that North Korea is doing its nuclear, it's building these missiles and equipping them all on its own is actually not true. However, obviously, Trump's had a pretty clear stance on what he thinks is the situation. So, lo and behold, you get the US intelligence officials come out with their own study saying North Korea has the ability to domestically produce their own engines that power ballistic missiles. Obviously, fits the Trump agenda quite nicely. So, I wouldn't really read too much into this. And it certainly isn't having much of an impact on market prices this morning. I think it's really unsurprising when you put into context who it is that's conducting these studies. But looking this morning, actually, at the charts, there's a little bit of moderate risk on still carrying through into the marketplace. Equity futures, both sides of the pond, on the front foot. The DAX already up about 100 points already, testing R2 pretty quickly this morning, and not much in the way of individual single stock news that really sticks out. But looking elsewhere, gold lower. If you were looking at the Japanese yen, well, let me just bring that into shot here in the top right hand corner. You can see dollar yen moving higher, so yen weakness, gold weakness, so a kind of continuation of that slight unwind of the flight to quality bid that really defined last week. And then likewise T-notes as well, down towards the 126 handle, which was the low from yesterday's session. We got close to testing that, but we're down around 3 ticks. What is the situation with Trump? Well, if you've looked at your phone this morning, looked at any, I guess, news website, and certainly if you've looked at any social media feed, you've probably seen a lot of angry people. This is because Donald Trump obviously came under scrutiny a few days ago when the violent clash happened with far-right extremists in Charlottesville in Virginia, which person died and so on, a number of people injured. Trump didn't comment. Then he did comment and condemned it. Now he's kind of taken it back. And obviously this has had quite a severe whiplash effect on social media feeds. So essentially, just to give you the kind of crux of the matter, a day after belatedly faltering white supremacists for deadly clashes in Virginia, President Donald Trump returned to his controversial position that there was blame on both sides for the weekend violence. And there's a lot being made of the fact that even people at the White House were caught off guard and surprised by the president's U-turn, and that he made the comment off the cuff. This is kind of classic Trump that we're getting used to in terms of his flip-flopping in view, and he tends to change it in very short time frames. But what does this mean, I guess, is that he made this comment over a speech specifically designed to be talking about infrastructure. Now, as we know from looking at Trump in terms of financial markets, we've been looking at really a couple of key things, such as corporate tax cuts, for example, the watering down of regulations, particularly in the financial sector, but infrastructure. So this fiscal pledge that he had made via spending, essentially, and infrastructure projects is absolutely critical in order for this so-called Trump trade that really drove the markets through the back end of 2016 and the beginning of 2017. But as ever, we await a speech on a key area for financial markets, and then what happens, it gets completely sidelined by a completely separate event. Before, it was about probes into Trump's activity and involvement with the Russians, and about meetings that may have happened that influenced the outcome of the US election. Now it's about this new kind of racial situation that's dominating over these other fiscal topics that the market's been waiting to hear from. What does this overall mean? Well, essentially it just means the whole thing gets drawn out further, and we get more and more inherent delays to the more market sensitive kind of issues that we just mentioned. Now, again, this hasn't had much of a read across onto the open this morning, but I was just interested to see the kind of popularity rating of Donald Trump at the moment. And actually, this is, so just to give you an explanation, so for any of the interns, this is definitely a website worth looking at. It's called 538. Essentially, this is a statistical analysis website, is the most simple way to put it, but it's run by a chap called Nate Silver, who is quite famous for his kind of mathematical modeling over things such as politics and elections and so on and so forth. But what this is basically a compilation of all the different polls that come out measuring the approval rating of Donald Trump. So how unpopular is Donald Trump? Well, the disapproval rating on balance here is 55.6%, approval at 37.6%. Actually, when Trump came in, the approval rating was 45 to 41. His disapproval rating overtook his approval rating after, I think it was about 8 days as being US president. So it's quite unbelievable, really. He only remained kind of in favor, if you like, for a period of just about a week. Before then, people were unhappy and have grown continually. A slight dip off the highest level we were back a few days ago, but certainly with this latest situation that has developed, it'd be interesting to track these numbers. And obviously you've started to see on social media more cries for impeachment, these types of things. How does this compare, though, to give you a bit of context to previous historical presidents? Well, really, let's focus on the top three, the more recent. And what you've got here is the beginning of their tenancy as the commander-in-chief. And the blue line is Trump. The darker line is the president that you're looking at. So Obama, George W., and Clinton. You can see Clinton had a real rocky ride, actually. after the first year, kind of dipped after the first 150 days or so before then coming back into approval rating to close out the year. George W. Bush, you can see here, had a massive spike. Anyone know the reason for that? Yeah, exactly right. I think he was about 235 days into his presidency when 9/11 happened. And obviously 9/11, I think it was 6 days after the actual event took place, was when he then identified it was Osama bin Laden. This then obviously was the trigger for invasion and Iraq and so on and so forth, the fight against terrorism. And so actually his popularity rating went from about 51% to 80 plus, up to nearly 90% thereafter. Obviously the sentiment was seen at the time very favourably amongst the American public of taking action in that atrocity that happened at 9/11. So it's definitely worth keeping an eye on these types of things. You know, if this number was, you would think, to get high enough in future, you know, pressure would mount on Trump. But the one thing I guess that's happened with Trump is that, you know, we are into day 208 of his presidency, and it would probably take me about half an hour to list all the different things that have come to the surface about Donald Trump in particular and his activities pre and post being elected as US president. But here he is, he's still here. And if anything, I mean, it's just proven how much stickability this guy has. And the interesting thing here is how the markets have responded. Because if you look at it, the S&P, let's put it into a bit of context. We've just been talking about, you know, the kind of uncertainty that might have been inspired by Donald Trump, the uncertain future certainly on the geopolitical scene with North Korea. But let's just put into context where we are at the moment in terms of financial markets. This is arguably the biggest, sharpest rise that we've seen in the US equity market ever. And it's under the tenureship of Donald Trump. You know, this is when he got elected. That was the initial spike low. We were trading 2028 in the S&P. And don't get me wrong, it was only 8 days ago, 6 days ago, we were at all-time record highs knocking on the door of 2,500. So to say the market is nervous about an impeachment, yes, there is that risk there. But I think that the market actually is fairly comfortable with the fact that US economy-wise, yes, there are some areas that could be improved, but overall, the underlying state of the economy is fairly healthy. And so despite these risks, despite the precipice of nuclear war, here we are. We're at record highs pretty much. So I think you've got to, although things like North Korea would have very grave consequence if there were to be military action, the likelihood is, the probability of that occurring is, I think, exponentially small. Definitely a situation that could occur, but unlikely to, and that's what these markets are telling you. Actually, from a pricing point of view, some might call it complacency, others might call it just a realistic pricing of the risk at hand. Okay, moving on away from this, let's have a quick look at oil prices, because what you've had here is a bit of a reaction this morning, and really there's two phases to this move I want to talk about. Phase 1 here, phase 2 here. Now, this often happens. You get the volatility on the initial release of the API crude oil data we would typically get if there's not a bank holiday on the Monday, then we normally get on the Tuesday evening, just after 9:30 London time. You get the first reaction. You then get Asia. Things are fairly quiet. Volumes are pretty low in this product during the Asia-Pacific hours, but then Europe comes in, and then it reacts to the same data that came out from last night, and we get maybe a second little push in the price action. You can see here, we briefly pushed above the spike high that we had on the release of the actual numbers themselves. So as you can see, we've moved from a price point really before the APIs came out from around 47.63 up to about 84, a high print of about 94. So 20 cents higher, we have been 30 cents higher on the back of the API. So this is telling you that the market has perceived last night's data to be bullish. What were the numbers last night for the APIs? A drawdown of 9.2 million. Expectations were for a drawdown of 500,000, or there or thereabouts. Biggest drawdown in the headline API crude since September of 2016. However, be aware, Cushing was a build of 1.7 million. That was 1 million larger than expected. Gasoline was a build, 301,000. Expectations were for a draw, and this is the second weekly build in a row. So obviously you get this knee-jerk reaction as defined by the initial price movement that we had last night. The market reacts to the headline first and foremost. This is ultra bullish, biggest drawdown since Sep 2016. However, when you start looking at the report in its entirety, we've got bearish Cushing, bearish gasoline. And so it takes a little bit of shine off the initial headline itself. Overall though, don't get me wrong, a draw of 9.2 million against an expectation of a draw of 500,000 is way off expectations. And so hence, you've got this, on balance, slightly bullish reaction, but it's not a runaway move on the upside because of the gasoline and the Cushing figures. So hopefully that makes a bit more sense. We'll be covering those again as we get closer towards the DOEs this afternoon. I'll have a quick run over the calendar now, and then I'll hand you over to Sam. So yesterday you had UK inflation, didn't change, 2.6% back to back, month to month, or the year-on-year readings have been month to month. It was 0.1 lower than expected, did put a bit of downside pressure, and we do reside still sub 129 handle in the sterling currency. Next up for the UK is the job situation, and this actually could be quite interesting, not because of the rate of unemployment. Not many people really care too much about that because historically it's tracking at fairly, well, actually multi-decade lows in terms of claimant counts and unemployment rate. What people are concerned about is earnings and earnings growth. Certainly amid, although inflation was still lower than expected, it was in fact still relatively high, certainly in comparison to the amount in which people are earning. There still is quite a large disparity between the two numbers. So that will be interesting for sterling traders. Keep an eye on that in FX markets. Then you've got the Q2 flash estimate for Eurozone GDP at 10 o'clock. We're expecting no change really from the previous 0.6 and 2.1. And then going into the afternoon, housing starts building permits from the US. Again, not really the housing sector data much of a focus, but we do have the DOE crude oil inventories, which will always be influential for crude oil prices to look at. Then finally, to wrap up the day, 7 o'clock in the evening, you get the FOMC minutes, a quick summary of what analysts at Deutsche Bank are looking at. They expect the committee to remain on course to announce the commencement of its balance sheet unwind in September 20th meeting, and they're looking that from the minutes and the detail, likelihood is that they had a healthy debate regarding the inflation outlook, as several policymakers have indicated an improvement in near-term inflation trends will be crucial to the prospects of another interest rate hike by year-end. Keep in mind, you have had Dudley, the vice chair of the Fed, speak multiple times since the actual meeting in July took place, and he has been pretty steadfast in the fact that he still thinks that balance sheet tightening should happen, as should an interest rate hike. So not really expecting too much out of this FOMC minutes this evening. Okay, hand you over to Sam. So that's all from me. Have a good session. I'll catch you in the chat room afterwards. Thank you.
Good morning, guys. Just going to have a quick run through some of the charts I've been looking at this morning. We'll start. We've got the euro dollar, which technically wasn't too bad yesterday. You had the, and I'll just mark it up here, the low from Monday, which we broke through, came back, found resistance on there since, so definitely an area to still be aware of, I would say, going forward today. You can see we've just broken above the high of the morning so far. Also, the range that we've been kept in here, you've got some nice areas around the S1, something to be aware of. So if we can perhaps push a bit lower than the low of the day, there would be obvious targets and a good level of support that could, of course, continue this quite significant uptrend we've seen for this year. To the upside, potential areas to be aware of. R1 looks quite nice with some good resistance levels from the previous day. 118 just above the level we talked about initially, and then obviously ahead of that around R2 you've got the previous highs from Monday and Friday. So I'd be aware of these areas all going into the rest of the day. Not expecting maybe too much going forward. No major data releases to shape the market like the retail sales yesterday. But for the euro, these would be the areas I would consider. Just going to have a quick look over at the pound as well. The low around last week, you have quite a few in succession before we did break through yesterday, and that around the R1 level does look like a very good area if we were to climb back up there to continue this bit of pound weakness that we have been seeing, and albeit a bit of dollar strength. Also just above or just below that and just above where we're trading, 129, the pullback yesterday and the pivot, another nice area to consider. And if we can make it down to the lows, which we're not too far off now, about 12 ticks or so, break through there, you've got to be looking down to S1, and you've also got a nice level just above there from the low of the 12th. So it'd be interesting to see if maybe both at the same time euro and pound can come down there if we do have a bit more dollar strength, and whether these levels would hold or not as well. But pound just ticking down, so worth keeping an eye on yesterday's low. A breakthrough there, 128.40 would be the next obvious target for that. And actually there you go, little spike down in pound. Worth keeping an eye on that while I'm talking. For the Aussie dollar, we mentioned this yesterday, good support area to be aware of. You can see down here the low of the 18th, just below today's S1. If we can get towards that area, it'll be interesting again to see how it holds up. Just out of the corner, I'm just checking Euro stocks, just pushing to a new high here, and then we have a look at the DAX as well, doing something similar. Important area for the DAX, you can see how well this area in the last few sessions has acted, so worth keeping an eye. If we can push through, let's have a quick look here, the R2 level, there would be the next obvious target, which has acted as quite good resistance over the last couple of weeks. Failing that, if it was to come back down to R1, does look like a good area. And actually the DAX has been quite technical today. The previous high of the morning around 8 o'clock broke through, came back, found support, and you can see, having broken through yesterday's sort of highs around here, the same thing happened. So worth keeping an eye on that DAX and Euro stocks, which are just pushing higher, and also Canadian dollar, if we just have a look here as well, just pushing higher as well, depending which way you look at it. If we look at dollar CAD, just pushing lower, and you've got a nice area which I had a look at earlier around S1, which would be a good obvious target for that pair. Having a look into equity markets, which of course, if you look over the last sort of few trading days, have been on a bit of a recovery. Bit of a bearish cash open to begin with yesterday, but came back to nice support areas in both the S&P, Dow and Nasdaq before pushing a bit higher. If we were to come back down there again today, around there with the S1 would look quite good. Good resistance area around, well, here as well, but the R1, yesterday's high, always something to factor in. Given the time of the day, probably better to wait for the afternoon. And of course, with oil coming out, could drag those markets around as well. If we have a look also at the Dow, it was looking at this area, I think this actually looks a bit better. If we were to again have a more negative cash open, yesterday's lows with S1 and some previous areas of good good price action, could be the sort of trade to go for there today. However, just momentarily ticking above the high seen yesterday and on the 10th. And if we can continue to push there, albeit maybe into the afternoon, then suddenly you are looking at the all-time highs again. So S1 and yesterday's low, perhaps a preferred trade. A bit closer to there, you have yesterday evening's high, which we did break through a bit earlier. Having a look at the Nasdaq as well. S1, yesterday's low, same as the Dow, a good area to perhaps get involved with. And again, you've got R1 and yesterday's high as well. So equities all looking very similar in the US as usual. If we switch over quickly to gold and have a look, the pivot area looks quite nice. Let me just refresh this chart. Looks quite good. You've also got a bit of a downward trend over the last few days with this dollar strength coming in and equity markets getting bid again. So worth perhaps looking for the pivot trade here, or the previous sort of pullbacks we had, which you can see again was quite nice and technical. Break lower, yesterday's low, and S1 could also come into play. At the same time, just had a look at T-notes during the briefing, which did pretty much make its way down to yesterday's low. Again, if the safe havens can push higher, pivot is not a bad area, with yesterday's sort of afternoon resistance for these markets to perhaps continue the recent trend of the last couple of days. Oil, again, Wednesday 3:30, the data release to come out, 47.98 still, or 97 that I just marked up there, still probably the most important level at the moment, I consider, with the $48 handle, with R1 as well, but probably better off unless there is some decent price action to hold out for the afternoon, given the release and the reaction we saw last night. So FX markets moving a tiny bit, but you can see having already pushed lower, you've had a bit of a snapback as well. We just heard on the score, we've got Draghi will not deliver fresh monetary policy message at Jackson Hole, so at the end of August. Wants to hold off to the debate into autumn, reported there by Reuters. So if we just go back to the Euro chart here, and you can see the initial reaction. So this was at 8.55, decent sized move, pushed through the low there. So just Reuters running that at the moment, so worth keeping an eye out if anyone else is to run that. Put your squawks on as well for that euro there, and you can have a look at the DAX as well. That also helped with Euro stocks and DAX to push those markets a bit higher. So sources reporting there that Draghi will not deliver fresh policy message at Jackson Hole at the end of the month, but worth keeping an eye on euro related markets here going into 9 o'clock. Okay, thank you.